Everybody, channel members, Rob, Frank, Donald, Diane, Rex, Mad, Sledge, good to see you, my man. Haven't seen you in a few days. Ivan, Darren, Jason, David, Svenborn, Kevin, Frank, Everett, Be Like Water, Dan, Ted, Cliff, General Rush, good to see you, sir, as always. David, Skaggs, Will, Mark, Joseph. Glad to have everybody. So we've got sector rotation happening. Hey, JB. And I, of course, been digging in, trying to figure it out, see what's happening. Pulling it up. Let's see if we can pull this over and share my screen with the right button. There we go. Make it a little bigger for everybody. Maybe if I'm on the right screen with the cursor. There we go. So here's what we got. I know these charts difficult. They're not all simple, pretty. This is what you get when you get stuff from trading desks, though. So here we go. This is what we've got. This is hedge fund, prime book hedge funds trading flow. We're seeing that blue is consumer discretionary stuff. It's been declining. We've got TMNT. We've got cyclicals. We've got defensives. Look at these defensives popping up here. Look, kind of bring the line up. January, we were kind of flat on defensives. Now look at that climb, 4%. So this is all from the start of 2024. So this is a year and 2 months of data. We're seeing this stuff. Hedge funds not so interested in consumer discretionary cyclicals and TMNT. And we're seeing interest in the defensives. Now, when we look down in here into sectors, what's going on? Look at that. We've got 5-day flow in blue and 20-day flow in black. Sorry, I can't pick the colors, but here you go. What's defensives? Look, materials. Dun, 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 dun. We've got let's see. Materials are big in there. Single stocks getting a little bit of flow over the last 20 days, but not much. We're seeing macro products declining. All U.S. equities kind of flat, a little bit sold. Real estate getting a little boost in there. Infotech right there. We're seeing a little flow into energy, little flow into financials. Over the 20-day, though, we've been outflowing. That's classic, right? Like money flows into financials ahead of financial earnings, and money flows out of financials after the financial earnings and into big tech. Look at that, flowing into big tech. And then we flow out of big tech and into some other things. So healthcare had some flow over the 20-day net flow. 5-day pretty much stopped. Then we've seen outflow over here, consumer discretionary, communication services, industrials, staples, utilities, right there. All right. Everybody has their little bit different way they kind of, adjust the pots, but there you go. Here's kind of the sectors. And remember, this is all hindsight. So what's next? Hard to say. But this is where the money's been flowing and where the performance has been happening. All right, hedge funds tend to lead the pack. They're the AKA smart money. And as I posted yesterday, we've got a little bit of issue, I guess, on hedge funds are selling, net deleveraging, while consumers, single stock trader, retail traders are still buying dips. So I think that's what we've seen in the chop as we've gotten to the top here. I don't know. And we've also got this right here. Get the right window up. So we've got most of, we're hanging right in here the 19th. So we're about right here. We've got about 80% of the S&P 500 back out of the buyback blackout. We've exited that. By the end of the month here, we'll be all freed up pretty much. 90%, 99% of them out of the blackout window, which kind of frees up that $50 billion estimated to flow into the market. If you haven't been watching this show and you're like, what are you even talking about? We've been kind of watching this. Click the wrong button there, of course. Let's try to get this back on the other screen. Oh, cool. It's not going to show me the ones I need. Gosh, love it, man. There we go. Load, please. Load, please. And my other screen's not loading properly. Roll back up a few days and pull up that buy back blackout window. See if I have it up anywhere. I do not. Let's see, where was the estimated purchase? There we go. This is the one. Open her up. Oh, that's cool. Not available. So I'll just drag it over. Right here. 55 billion estimated. Once we got out of the window, just coming up right here at the end of the month. We're coming up on this. So, and then of course it unloads. Cool. Thanks, Discord. I don't know what's going on. Being super handy. So that's what we're looking for right there. Is that why it won't open? I wonder if I have that window open somewhere. Pain in the butt. Pain in the butt. I leave these things open and it doesn't want you to steal the content, so it creates this like problem where you can't look at it. So fun and cool. Yeah. Just being a pain in the booty. All right. Anyway, flips the same side. The flip side, we have that seasonality playing out that I talked about last night during 30 Minutes of Awesome. And that could play into, we could see a dip into March, even though we're coming out of the buyback blackout. So could see that occur right there. And Douglas says he can't hear, but the my feed, the sound's going on the feed going out, so not sure what's up there. Hopefully everybody can hear me. And so seasonality playing out. We don't really have much. We have the FOMC minutes coming out at 2 p.m. today. That's just the minutes. It's not really, I mean, minutes are minutes, you know. It's like, what did we discuss? So it really depends. And thanks, Kevin. A little bit of feedback there. Minutes are minutes. They're in the past. Just gives us a little bit of, I guess, insight into what they were thinking as they decided to hold rates steady and possibly maybe have to have upward pressure. All trading involves a substantial risk of loss. Before we talk about trades, you can lose money doing this thing we do called trading. Past performance not necessarily indicative of future results. Presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything. Hopefully you're entertained. And if you desire that personal financial advice, you got to hire and consult somebody that's certified to be giving you advice based on your financial situation, which is not me. I'm not pretending to do that. So we had housing starts and housing permits, and market just said, meh. Basically came in kind of in line. It's not, few people were expecting a big explosion in these numbers. I just don't. Like, I think we're going to keep it all real steady. Now, this, depending on what the particulars are, the bots may react and then create some sort of, like, that may be some sort of excuse for market to move this afternoon. So be careful. You know, I didn't watch anything about Trump yesterday. Looks like he finally spoke after the market closed. I didn't watch any of it. I didn't pay attention. I don't know. Just wasn't on my need to know radar. I mean, I know he's going to cause volatility. That's just a given. The particulars of what he says, I don't really care. Don't really care. It's just knowing he's going to speak is the big events there. So coming up on Thursday, not much economic news wise. And then coming up on Friday, we've got these flash services and flash manufacturing PMI numbers, existing home sales, which it depends. If that makes a sudden jump, it matters. But if it just comes in line, we've been climbing a little bit. So consumers are getting a little more confident, but that's lower highs. All the same stuff applies. Like when you look at these price charts, lower highs. So we could do another dip over here, and it could go on down towards zero. Not great. When we look at the historic here, we're kind of indicating problems. We'll go back and look. We don't spend a lot of time down here at these levels. This is a side effect of high interest rates. Relatively high. I appreciate that giant tool hanging out there. Oh, cool. So, guess the market's open. Let's see. Let's see if I can mute that. There we go. Should mute. And I don't know. That doesn't look good, right? That could bring us into recession. Even back here in the housing crisis, the great financial crisis, look, we're worse off. I mean, we did that dip here coming out of but it wasn't prolonged like we have right now. This is a prolonged period of existing home sales not really moving. It's kind of frozen up. I don't know. If we get another dip in here, not looking great. Yeah, a lot of our economy runs on housing and building stuff. So when that freezes up, it creates ripples through the market. Other problems. We're seeing home listings in the DC area. You know, this is I've been kind of speculating on this a little bit. Like we're seeing 250,000 people let go of the U.S. government right now, mostly in the DC area. A lot of housing coming up for sale, like housing for sale listings, whatever, have exploded like 400% was the last number I saw over the last month. Well, you know, Trump took over a month ago, just about, I guess, tomorrow, that'll be a month ago. And what happens when this gets outside of the DC area and we start going to the national labs all over the country and cutting people, and then we go to the FDA labs and the other labs and the NOAA labs and we have all these government entities, and what happens when we start spreading out to these other labs and laying off extra people that have been there working? And this town right here that I live in, Knoxville, we have Oak Ridge National Labs, and we have a giant DOE site here in Oak Ridge. Got its fame from World War II, creating the bomb. And what if all of a sudden they cut a ton of jobs there? Cutting 5% would be pretty devastating to the local housing economy. Even 10% reduction. Layoffs, just clean house a little bit, get rid of the dead weight. That could be pretty, you do that all over the country where all the labs, you've got Idaho National Lab, White Sands, the one out in Berkeley, you got the one, you just got them all over the place, all over the country. And you start trimming the fat, so to speak. So this could be the unintended consequences I was talking about for the last 6 months as this unfolds. So we'll see. Got to keep an eye on these existing home sales. If listings start exploding and the sales are still in this low place, I don't know. If we run it on down, I mean, the zero line on here is like 3.5 million. So I don't know. I don't know. We'll see what happens. It's gonna be a fun ride. They could accidentally, unintended consequences, accidentally cause a giant recession / Greater Depression. So yeah, you can say, yeah, there has to be some pain to get the game. I mean, it's like I've been warning though. Like, yes, the debt was out of control. Like that was we're on an unsustainable path. But it's not just rip the band-aid and everything's cool. The solution's gonna hurt. It's like there was no good solution to it. Like there was no easy fix. It's gonna hurt both ways. I'm just warning that we're probably going to experience a big down, and it's gonna get blamed on fixing the problems. I mean, the only reason the economy's been growing for the last 3 years, GDP's been growing, is on government spending. We cut out all that fat government spending. Guess what? We've been in a recession for years. So, anyway, I was playing around with this yesterday. I realized that I had drawn a 1, 2, 3, 4, 5, and we're almost up to the 3. And it kind of outlined exactly. I just zoomed out and looked at it. I was like, hey, I put these on here a while back, and we might top out here. We might drop back down here, and then it's kind of like exactly the way I laid it out. It's kind of funny to me that way. Funny, haha. And we'll see if that's the way this works. Once we get to 5, though, that could be a bigger down setting up in the market. Could be. So ES overnights not coming into today. Very spicy. Getting a bit of chop. On the 30-minute yesterday, we were holding. Retesting again this morning. That's starting to look like maybe a 3-wave correction. So we may see some more downside today. We may push it down in this area right here. May see that bleed off into the OPEX. This is the monthly OPEX this week, right here on the 21st. So we may see this just chop around for 2 more days before we can free up some of the market to move, I guess you might say. Looking at the NQ, same kind of situation, lower high, 3-wave move, first move, retrace. If we don't so this is if we don't hold the roadmap line on ES and NQ, we're probably going to dip right in here. Then we'll hunt for supports and then look for the higher or break on down and go lower. We have that downtrend of highs, but we might go retest. That's on both. And this is the little bit higher, accelerated, more bullish downtrend of highs here. May retest that on NQ and ES. And if you're not sure what NQ and ES are, ES is the S&P 500 futures, the E-minis, and NQ is the NASDAQ 100 E-mini futures. We've just kind of been watching these because the cash index stops closing. I mean, stops trading when the market's closed. Put the words in the right order. That creates gaps overnight. The futures trade pretty much 23 hours a day, 6 days a week. The market's open on futures. So we get a lot more complete price action. Now, distortions can occur when we have lower participants. So you got to keep that in mind too. But when we look at it here, just on the daily, this looks like we might push down. Yeah, there was that 30-minute test right there. We might get that retest of this accelerated downtrend of highs before we can push on up. That could occur through the next 2 days. Kind of the path I'm looking at right now. More chop, right? Yay, more chop. And looks like Russell is going back down for like the 900th test of the roadmap line. That's probably what we're doing there. Chop is not my favorite market. And check it out. I speculated based on seasonality that we may see this rally in the mid-March. Might be an opportunity. I don't even know what I did with that seasonality chart yesterday. Let's see if I can find. Here we go. Nope, that was not it. Let's see if I can find. Nope, that was not it either. And cool. I love it when things don't work. Brilliant. There it is. That's the one I'm looking for. Where have you been? Here we go. See a spike right here? This is what we might have playing out from now, kind of just past mid-February. See, that's January, into February, into March. So right here through, we could see a 4%-ish pop in oil just based on the last 17 years. Well, that's actually 2 years ago, so I don't have a great way to update these constantly, but so there you go. Based on the seasonality of oil, we may see a little pop here. Why? Well, when we go look at it's not so much evident here, but when we look at the gasoline, let me get on the right chart, RB1 exclamation points. Check this out. This is where it really shows up. See this right here? We get this seasonality of gasoline futures. And look at that pop right there. That was the contract rollover right there. We switched from the H contract, the March contract, to the April contract. There was a big discrepancy. And that's what it's already priced into gasoline. It's part of the switching over to the summer blend, if you will. Winter blend, summer blend, switching over. And demand increasing, whatever the dynamics of the gasoline and oil market. So we see it right there, and that can drag oil prices up with it. So, and that chart I had up a second ago for the seasonality is USO, not, look at that. We're already, I drew that last night, a 4% pop. Look at that. We're already halfway there. So if you wanted to take advantage of something like this, UCO, see ultra leveraged oil. If we're going to pop out and actually make some sort of extension, we might see this rally on up. A little bit of opportunity here. Got lots of stuff drawn on here. Got that high, we've got that low. Didn't hit the roadmap line on this time frame. Got resistance right there at the 618 level. So we might see a rally just up to there. If things got spicy though, we could see a rally on up here. 86 on USO. That would put us up about 12%. Which if you go to a leverage product, 2x leverage, that could be a 24% upside on this one. Grab this tool, 24% upside. Could take us, yeah, we could see, that could be a pretty spicy move right there. 23, 24, could take us up to 35. If we got a 12% move on oil. All right, hopefully this is helping everybody understand some of this, how to take advantage of some of these plays here. Now, could you go buy options on UCO? Well, you could. But you got to be exactly right on time frame. How long is this going to take to play out? I don't know. Might take to March, might take to April. Don't have a lot of options. Tongue in cheek. You don't have a lot of options on the options expirations here. You have several weeks out to April, but then it gets choppy. You don't have May listed. Don't have June listed. The options market, the CBOE, tends to keep these listed where people want to play. Things that wouldn't be so liquid, like May and June right now, not so liquid. But as we get into March, May will show up, and then as we get on toward later in March. June will show up and kind of complete this picture. So these ones that are already out here are important days for oil traders. And you can see the volatility curve for the 30 days. The term structure. We have some volatility now 9 months from now in this leveraged oil product. We look at USO. And we've got a little bit of volatility here 2 weeks out and a little bit of volatility 9 months out. You could sell this volatility here 2 weeks out on USO. That'd be, what do we have? That's more, let's see. Wow, I'm getting several expirations a week now. We're getting 3 times a week. Interesting. Get more expirations showing up in oil. That's kind of fascinating to me. Anyway, about 2 weeks out, so roughly here. Some volatility you could sell in here. Potentially some premium. All right. Let me know in the chat if you enjoyed that conversation on potential ways to play oil. Gold is being quite volatile. So far, this is the lowest volatility day we've seen lately on gold. Be freaking careful right here. We've been seeing that play in that 100-point range. And in Term Trading Lab, we had a conversation yesterday. It's not uncommon to see gold take a 200 to 250 point drop, pullback. Think about that, 250 points, take us down to 2,700. And that drop commonly occurs in 2 to 4 days when you go back and look at the history of gold. So we could be back near the roadmap line in just a couple days. Why would we do that? I mean, there's a multitude of potential reasons out there right now. An audit on Fort Knox, all of a sudden we figure out the gold's not there or the gold is there. And what does that create? Some sort of potential freak out? I don't know. Bitcoin, I'm really frustrated on crypto right now. This inability to do anything. Like yesterday, we couldn't break down, got held up, pushing it back up into this tight range is freaking maddening to me. I don't like small tight ranges. I like things to trend. I'm a trend pullback continuation trader. When the trend is dead, it's just super frustrating. So I move on. I don't like to talk about it. I don't like to look at it when things aren't moving. So this isn't moving. It has not been moving for 2 weeks. It's not fun to talk about when they're not moving because there's no anybody that's hyping it up oh, we're about to break out. They're intellectually dishonest and full of crap. All this says is there's no interest in crypto moving. Crypto is the risk on, risk off asset for the market. That's indicating that we're just going to get more bullcrap chop in the market. People that are high risk aren't seeing giant upside in the market. If we were seeing giant upside in the market, this will start moving. This tends to move in a leveraged way. Risk on in a leveraged way. When the market's risk off, we tend to pull back. When it's just sitting sideways, the market's just going to keep churning. So that's what's Bitcoin telling us. Bitcoin's telling us the market's just going to keep churning, baby. Keep churning. Not going anywhere. Not going anywhere. And that's frustrating to me too, because that means ES didn't go anywhere, and Q is not going anywhere, Russell's not going anywhere. Everything's just going to keep churning, and I'm going to keep sitting on my hands. Somebody yesterday was asking why I haven't been posting Apollo trades, because I'm not taking any Apollo trades. I'm just sitting on my hands waiting for this sideways crap to end in the market. It's I've been selling a few credit spreads. I've been filling, things like that. So as we come into the market, Bitcoin was up. This is an interesting point here. correlated when they're correlated, not when they're not. Bitcoin has been somewhat of an indicator because it was green when the market opened. We may see S&P 500 close green today. It's like an 85% correlation during a certain period of having run, which we're kind of in right now. Yesterday, Bitcoin was red. We closed red. Or we went down, at least. We kind of closed a little flat, but we saw downward pressure most of the day. Bitcoin's green. We may see some upward pressure develop in the market. So it's just something to keep an eye on. But you got to look right when the market opens, because after that, dynamics change. So let's keep an eye on that. We may see a green close, or at least some upward pressure on S&P today. Kind of just applies to S&P, not really NASDAQ or Russell. NKD still sideways, not really indicating anything. Dollar still working on its trip down to the roadmap line, and then we'll see if we hold support down here, and then what happens. I swear I've deleted this bubble off of here a couple times, and it is still there. See if I can save it. I got these things open on too many computers, and they resave over each other. All right, I go pull the gainers, things that are moving up $2 or more in the pre-market, put them on the list. Things are moving down $2 or more, put them on the decliners list, and we look for opportunities like Garmin here. Nice pop. Last pullback was back here. Not really presented any opportunity. Watch out, this may pull back. I mean, I have a Garmin watch. I love it, and we'll see what happens. There's a Garmin building, what we call the Garmin building. It's a Ming Cow. It's like the whatever his name is, the guy who started Garmin. There's a building at UT in the electrical engineering department, like the Ming Cow building. Wow. That's a big long blurb about Garmin. And you can see right here, price to sales and stuff, pretty benign. So this has upside potential. They have any killer products that everybody's got to have? I don't know. They're kind of in the sports fitness stuff, and they're into, fish finders, and they're into aviation stuff, and seem to be carving out their niche pretty good. When you look at the bigger pullback here, could have upside to 288, but they haven't done any real pullbacks to give you an entry here. So this would have been one. If you're a big picture, we're already coming in. We had a little resistance there. Now we're starting to break through. So 288 maybe where we're heading, right up in here on Garmin. Don't really see giant upside opportunity for me on that. Just not the way I trade. Watch out for SMCI to pull back. We hit the resistance pretty hard yesterday. Watch out for that to pull back. We could go as high as this level. If we respect that and turn down from there, could result in a bigger down to this target area down in here. There's something coming up on the 25th. I don't know what it is. I keep seeing it from a couple of the financial people I follow. I haven't been interested enough to dig in, but I thought I'd warn something on the 25th. I don't know. They missed on top, missed on bottom earnings. Earnings on top, revenue on the bottom, missed on both. Not a big miss. Missed by a penny. Missed by 65 million. So getting a little downward pressure today. FSLR. Well, let's roll back up to keep back in the list here. Wix. Looks like that wants to drop out. It was green, but now it's turning red. ADI. Market turned a little sour on everything. We were seeing things popping, but that's pushing up through that downtrend of highs. If we can maintain that, potential to get on higher. Boil. Wow. What's natural gas doing? Yeah, it looks like we're going to break out. Natural gas probably going to go up here. And then watch out for a big negative reaction. So 460, 480 looks like the next upside target for natural gas. Let's remove that bubble. Remove the bubble. That high, that low. Yeah, right there, 465, 488. Corresponds with that next fib line. There's your target zone right there. Oil might go higher in the short term. Be careful though. If we hit that target area, be time to step off. SMCL, yeah, watch out for that to retrace. LNW, Light and Wonder. Never even heard of this. It's always fun, like dig through these charts and you see stuff that you never even heard of before. I have no idea what they do. 120. If we can close right in here, above this, right over here, probably going to 120. Solar Edge finally popped up into the resistance. If we can get above it, things look good for going on higher. If we bounce off and go down, extension lower, that'd be the roadmap bounce. There's the low, there's the high. Potential to crush it on down to that level right there. SMCI. You know, like I said, be careful. That's a 3-wave move. Equality on this. That move up right there becomes, oop, grab the wrong thing. Love it. I can't even grab a bubble, but somehow I grabbed that orange banner and moved it. Freaking whatever. Whatever. Equality comes in right there. Right, that first move up, that retrace, that second move up. If we hit that, turn down here. FSLR, continuation lower. Potential to have bottomed out. We didn't completely hit that bubble, but I mean, we double tapped it. Resistance right at the roadmap line right there. Coming down. Coming down, coming down, coming down, coming down. So resistance there, support here pretty much. It's like a wedge. We may continue down that way. I don't know. No opportunity for me at that point. I'm looking for the best of the best stuff. Always looking for the best of the best setups. And that's not one either. Well, there's potential here. Going up to 44, 46. That's just more chop in a small range. NTRA. I'd watch out for that one to retrace. LPX. That one did retrace. Holy moly. Did I grab the right list today? Holy man. Should reload and see. Yeah, it looks like it. Somebody's giving it up. TXN. Nice pop. Roadmap line is resistance right there. And then this high right here is resistance above that. As I talked about last night. So check it out. Like this position of the 618 doesn't make a lot of sense. If we were to pull this on down like this, all of a sudden the 618 lines up with that high. That makes a lot more sense. But we haven't done that deeper push down yet. So that it's possible, possibly indicative that we're going to hold resistance in here and drift down to that lower level before we bounce and then go test that resistance here. Now it's, we're just splitting hairs on where it is. It's just above that high right now, but it's kind of floating out there where it doesn't make a lot of sense. It makes better sense if it was pulled down like this. And then it kind of lines up better on these prior lows over here. It just lines up in a better place. You take and extend that line on this way. Now, the funny thing is this 618 level isn't there, and it wouldn't be there until we did this dip on further down. But it lines up with all this other stuff and would make sense like it commonly does. So it's just one of those things, like in the market, the 618 level tends to show up at a place where a lot of prior support and resistance was. We'll see what happens. Coin looks, if this doesn't go for the roadmap line now, I don't know. Like this has that setup, and just reaffirms that Bitcoin and crypto is probably going to get a little more softness in it. There's the first target. There's the second target on the downside right there. Capital One Financial pushing on higher. We're sitting at that 1448, that 1272 up there at 220. BWXT pushing on down. We've got that move down. We've got that retrace. And we basically hit the parity, the equality, where the first move down and that move are at relative equality. We could see this bounce. 618 resistance. Of course, that's not in the right place because we've got to pull this down to the lowest low. Now, see how that's kind of, it looks like it would be in the right spot. So we may see this rally up, break above, got that gap down, get through it, go on higher. Upside target on that one would be around 141. And TAP, more chop, declining highs. Not my favorite. BitX, churn, and probably going to hit the roadmap line. Probably going to hit the roadmap line. It's leverage Bitcoin right there, 2x leverage. And SINT, and nothing. It's a dumpster fire. BTCW, Wisdom Tree, Bitcoin Fund, probably coming back to the roadmap line. Marvell, probably coming back to the roadmap line. Come on, you can do it. Draw the line. There we go. Probably coming back to 94. Another leverage Bitcoin, probably coming back to the roadmap line. OSRH. That looks like a SPAC. SPACs are back in a big way, so that's another cautionary thing. Risk capital going a little crazy. ENPH, potentially a bottom. Resistance at the roadmap line. ARKB, Bitcoin, looking for that dip to the roadmap line. INOD, watch for that to come back down. Fiverr, watch for that to hit. Talk about some volatility on that chart. Ooh, baby. Potential 37, 38 on the upside. I don't know, man. There's a lot of what I would call random noise in that stock chart. So I would be cautious trying to chase that one. SMCY, that's a yield max. I don't like these yield max tickers. They just are not very reliable. Like, even with the adjustment, the dividend adjustment taken into account, that's still a nasty chart. That's still looking like that three-wave thing on SMCI. Be careful. Permacautious. Wingstop getting slammed. Whew. Let's see what we got. Can we predict more downside on Wingstop? Support is all the way down here on Wingstop. If this rolls, and that looks kind of three-wave up, so that's really deep on a retrace for that move. I'm not sure. This looks a bit unclear at the moment. Maybe just doing a weekly retrace here. So there's what we might be hunting for right here. This hit on the weekly chart, and then turn and burn. That would make actual kind of make sense actually. More than anything else more than any of these other fib lines I put on here. If we don't hold that, if we get below that like 240 area, it's probably coming on down here in the vicinity of that prior correction over here. That fib line looks like it's in the right place, though. You see how, back to what I was talking about before, you know, this correction right here, excuse me, if we hold that roadmap line right in there, dip just a little further, that 618 level looks like it's in the right spot when you look back at that other price action there. See that? Now, this didn't exist before we did this pullback down to potentially this level that's a little bit lower. Right here. It's funny how this stuff all happens. See, all this price action was kind of above that level, and then this down here, this consolidation just below that level. But that level's not even set yet because we haven't made the low. So that might be a buying opportunity if we dip just a little further and then break back above that level. We could be looking up to 465, 500 on Wingstop. Could be a pretty good little play there. CE. Wow, that's going back to COVID lows. CDNS. That looks like that's going to come on down. Potentially in that zone right there. 4. Tried to break out, breaking back down. May come back down to the bottom of this wedge. Couldn't hold the breakout higher. Now, last time it tried to go out, it held right there at the top of the channel, then goes for another. So we could hold it at the top of the channel again and go try and break out that higher level. ANET's, oh, probably coming down here. PTIR, that one's going to give it up sometime. Just be careful. PSN, watch out below. Golly, I don't know. That might retrace pretty deep. We can see something back down around 50 pretty easily. Something back down around here. Toll Brothers. I warned about that back test. We're dropping on down. Probably gonna see all the housing suffer. Workday sitting right at this resistance. If we could push through, we may have a bigger upside target. Just kind of churning right now, not being very strong. FLS looks like it wants to come back to the roadmap line. Almost there. GLBE looks like it wants to come back to the roadmap line. Bulls 212 target out there. ETSY. Choppy, choppy, choppy. Hitting the resistance at the roadmap line. May make a lower low. Right down here. HHH. Howard Hughes Holdings. I'd watch for that to drop back down here. That looks like it's very choppy. It's kind of declining over time. Not being very strong. I'm be very cautious trying to trade that one long. PHG, if we can break back above, well, yeah, it jumped down here. So yeah, that's going lower. Just a little baby retrace and pushing lower. Maybe support around this 20 area. I don't know. We have this giant gap down or gap up over here. So if we don't hold that, we could be cruising on down lower. Nail. That one's pushing on lower with Toll Brothers. DR Horton pushing on lower. I kind of warned about this. Anybody heed my warnings on that one? Harmony Bioscience down at the roadmap line may break. I mean, that's just choppy. Biotech, pharma, choppy. Just stay away. That looks like we may break down and go lower. CRH at the targets back to the roadmap line would be expected. AU, Shanti Gold, probably going to retrace back to the roadmap line. AVGO has potential to, if we roll here, we have potential to go hit the roadmap line. Lennar, pushing lower. Target down here. DPST, that might come back down to the roadmap line. if we can break above this 141 area, looking for 189. INTW. Brand new 2x leverage on Intel. Get a little pullback today. DY. Not good here. If we get below these lows, we could take a bigger dip here on DY. WWW. Wolverine Worldwide. Looks like we're seeing a little bit of instability in clothing stuff. This looks like it wants to do a retrace back down to this area right here. Cold. And that one's going on a dip here. It didn't get the pullback in natural gas, so this is coming on down. We have support in this area. If we get through it, we may go on down lower. And weird, however you say that. Not enough candles for anything. Crazy pop. All right, bonus trade, SMH right here. Check this baby out. There's the high. Here's the low. Right there. There's a buy right there. Put me on the other side so you can see all the numbers. 23 trades, 91%. Profit factor of 10. It's pretty likely to work based on history. There's the target right there. Pretty cool, right? Nice. And for those of you that want the actual numbers, let me go jump over here and grab those really quickly. Give you the numbers to actually target. Target dog. Let me pull this over right here. So we've got target 275.08, stop below 231.24. That is a $18.86 upside potential from yesterday's close. And the win rate is obviously higher, and the profit factor is obviously higher. That's 34 trading days on average, and we've done 23 trades. So that last trade was profitable and took it all higher. So 34 days on average. What does that mean? Well, let me jump back over here, put this back down. 34 days. So we grab this tool right here, go from today, pull this over 34 days, 34 bars right there, 34 bars. That's 48 days, 48 calendar days. That makes April 8th. Now that's just the average. It can last 2 times the average, which would be 78 or 68 days. Excuse me, 68 days. That would put it out to May if you're trying to play this with options. So it could take out to May to get up to that level. And it could take 3 times longer. Now, why is the calendar days different than the bars? Because we don't make bars on weekends, but we do count days. So that's why it's slightly different. This one worked out pretty fast over here. Kicked off there, hit the target there. This one kicked off here. Potential to go up there. It can fail. Should stop out $1 below the low. Or if we break down, there you go. Let me know if you take it or do it or whatever. David, hey, hope you're feeling better, my man. And we'll see you later. I'm going to wrap it up here. Hope you have a great day.